You no longer need to beat traffic or queue in a banking hall to transact. Gulf African Bank's online banking platform, GovNet, offers you the fastest way to manage your money from anywhere, anytime, secure.
Assalamu alaikum wa rahmatullahi wa barakatuh. Natukua fursa hii kuwashukuru kufika kwenye hafla yetu ya wanawake. Alhamdulillah, baada karibu miaka miwili hatujaketi pamoja wanawake kwa kikao kama hiki, na hii fursa ya kwanza ya pili actually kwa Gulf African Bank kuzungumzia kuhusu Islamic banking. Islamic banking ni model ambao iko miaka mingi sana, lakini hapa Kenya imekuja I believe around 1980s. Unaona, sasa watu wengi hawaelewi Islamic banking ni yafanyika vipi, ama ni process gani, ama ni namna gani. Sasa mara nyingi watu wana misconception, wasema ni interest, lakini tuaita profit. Mwezi mmoja wa nyuma tulifanya function kama hii, tukaita wanaume peke yake, tukawaeleza Dr. Islam akawazungumzia, akawaeleza ile namna Islamic banking inavyo operate, na tukaona kwa nini tuambie wanaume peke yake, na sisi tuna dada zetu, mama zetu, ndugu zetu, na ni wateja wetu pia, na wao watakawafaidike. Na sisi kama wafanyikazi wa Gulf African Bank tulikuwa tuwafanya kazi kwenye conventional banks sote kabla Islamic banking haijaja, na tulipoona yaje Islamic banking tukaamua tunataka kuwa part of the process. Ushaona, tukaingia Gulf African Bank hata kabla haijapata leseni, lakini tukasema tuatawakal kwa Mwenyezi Mungu, maana kitu kizuri ni nini, ambayo dalili ya jambo zuri huonekana asubuhi. Ushaona, sasa asubuhi ushaona jua la waka vizuri, wewe ngoja nini, watawakal. Alhamdulillah, leo miaka 14, alhamdulillah tuna branch ngapi? 17, alhamdulillah. Lakini sasa kwa sababu ya COVID mitihani yamepita kila mahali. Sasa mutasikia kama Gulf African Bank ya punguza branchi 3, na kupunguza sio kwa punguza wale staff, lakini wapunguza zile matumizi zaidi. Ukiangalia branch ambayo tutafunga ni Bombolulu hapa Mombasa, na Nairobi kuna Luthuli Avenue, ile ni service center, na kuna na Westlands. Nafikiri nyote mshaona COVID imefanya watu wafikirie vingine. Sasa kila mtu iwenda digitization, so kupunguza hizo branch doesn't mean tuwapunguza staff, lakini tuwasongea sasa tuwaelimisha kila mtu awe yuko kwenye digital channels. Kabla tujasema maneno mengi, afwan, kwa mwanzo tuanze na dua. Ushaona, naomba sote tusome Al-Fatiha moja. Bismillahirrahmanirrahim. Alhamdulillah. Iyyaka na'budu wa iyyaka nasta'in. Siratal ladzina an'amta 'alaihim ghayril maghdubi 'alaihim waladdallin. Amin. Tena nawakaribisha tena na washukuru kwa kufika kwa hafla hii, na naomba sote tutaelimika leo, tufahamu vipi Islamic banking vile imeevolve na vipi inavyotumika kwenye mambo yetu ya kibiashara, na vipi tuweza kufaidika sisi pia kama wanawake. Sina maneno mengi, ni kumkaribisha Dr. Islam atueleze zaidi. Shukran.
السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على رسوله الكريم وعلى آله وصحبه أجمعين. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي. Nashukuru Allah subhanahu wa ta'ala kwa kutujumuisha katika kikao hiki, na kama mlivyosikia katika utangulizi na makaribisho, tumekutana katika asubuhi ya leo ndani ya ukumbi huu kwa lengo maalum na lengo lenyewe ni kupeana fikra na kuelimishana kiasi ambacho Allah subhanahu wa ta'ala atatuwezesha kuhusiana na masala ya Islamic banking na finance. Kabla sijaenda mbali, napenda kutoa shukrani za dhati kwa waandalizi wa kikao hiki, ndugu zetu upande wa Gulf African Bank na wote ambao wameshughulika na kusimamisha kikao hiki au mkutano kama huu. Naona kama tunavyoweka katika anwani za PowerPoint ambazo nafikiri sasa hivi mtaanza kuziona katika screen, ni Introduction to Islamic Banking and Finance. ambayo tutakuwa nayo. Na ili nisisahau, wacha niseme kwamba hii layout ni ile layout ambayo tulikuwa nayo katika previous presentation kwa upande wa brothers, na nimeonelea ni vizuri kuirudia kwa ufupi na kwa haraka hii presentation kwa sababu mbili. Sababu ya kwanza, ili niweze kupata landing ground baina ya presentation ambayo imepita na hii ambayo nitazungumza leo kwa kikao cha leo. If decide kwamba I just go directly to kuna masaji mengi ya msingi basics ambazo tunazitaja hapa katika first presentation. Kwa hivyo we are going to go through the first presentation slightly in a faster pace so that we have a transition or a smooth transition to today's presentation. Reason number two, today's presentation is going to be slightly technical, but it's still to go back to introduction. We won't go very much in detail, but still, without his foundation, as I said, then there is a very high likelihood of people may get lost. Kwa hivyo ndio maana nikaweka hii previous show for presentation, lakini we are going to go through it faster kuliko vile ambavyo tumezungumza last time. Hii presentation contains about 45 slides. Tumeisoma hii last session in about 3.5 hours. Na with Q&A to extend takriban 4.5 to 5 hours. Kwa hivyo I am supposed to bring this presentation to under 1 hour. Kwa hivyo nawaomba mwe wasikilizaji wazuri, because I will take you a bit faster, tuweze kuikamilisha in a time limit of about 45 minutes. Considering the fact kwamba tayari kidogo tumeanza late na tunawaomba radhi kwa upande huo. Layout yetu itacover the following topics: definition of terminologies, kisha tutazungumzia foundational principles, na baada ya hapo tutakwenda katika basic principles of Islamic financial system. Kisha after that tutaingia katika theoretical and empirical background. Kisha baada ya hapo tutakwenda katika salient features of Islamic banking and finance. Kisha tutaingia katika overview of Islamic banking and finance, na tutakwenda katika Islamic versus conventional finance comparison. Alafu tutaingia katika finally or just before the last topic, some misconceptions and myths, and finally key challenges and the way forward. So this is the list of the layout ambayo tutakuwa nayo katika session ya kwanza ya kikao hiki. Na kabla kuingia katika definition of terminologies, kawaida katika presentation zetu hizi tunaweka disclaimer, and the purpose of this disclaimer ni kuelezea mambo mawili muhimu. Jambo la kwanza ni kwamba my presence here with you na mazungumzo ambayo haya yanayozungumza, it is meant for knowledge purposes only, for knowledge, kuelimishana na kufundishana. It is not meant in any way to promote the name of the bank, to market Gulf African Bank or any other financial institution. I am not here for that purpose. Lengo ni kuelimishana na kupeana faida kama tulivyosikia katika utangulizi wa wenyeji wetu. The other disclaimer I want to also present ni kwamba, as I said earlier, this is meant to be an introduction. Kwa hivyo expectation yetu tukitoka hapa ni kwamba at least we have a general overview, basic knowledge of what Islamic banking is na finance. Itakuwa at least tumetoka katika pengine some certain level of ignorance or certain level of misconception or certain level of preconceived notion ambazo haziko sawa kuhusiana na field ya Islamic banking na finance. So tukiweza kusongea mbele kidogo, hata kama ni 10, 20, 30% ya the right knowledge, then I consider that a good achievement. Kwa hivyo, these are the two disclaimers I wanted to put across before we go any further. Starting with the definitions, we are defining number 1, Islamic banking and finance, which is abbreviated as IBF. So mara nyingi ukiona katika academic papers, katika vitabu vya finance, you may come across an abbreviation or an acronym, IBF, and that stands for Islamic banking and finance. What does it refer to? We apologize for the slight interruption. Okay, nafikiri for the purpose of saving time, itabidi tu kidogo tuendelee while we are working on the technical part. Surprisingly mepotea, we had it before. Okay, tulikuwa katika definition na tumesema Islamic banking and finance refers to banking and finance activities that are consistent with the principles of the Islamic Sharia. So generally, ukisikia neno Islamic banking and finance, maana yake ni banking activities, finance activities ambazo they go hand in hand with the Islamic principles, Islamic law, Islamic rulings, and so on. We have some other terms. That's why unasikia wakati mwingine it's called Sharia compliant banking or Sharia compliant finance. And what that stands for ni kuwa the financial activities that are undertaken are consistent and congruent with the Islamic law. Sharia, for that matter, because we have mentioned the word Sharia, Sharia refers to a set of divine sacred laws that govern all aspects of human life, dealing with religion, religious, non-religious activities are all supposed to be governed by Sharia laws. Thirdly, the main component of Islamic banking and finance are Islamic bank, Islamic insurance, and Islamic capital markets. So when we hear the word Islamic finance, it is a general term that comprises of various areas. For example, Islamic insurance is part of Islamic finance. Islamic banking can also fit under Islamic finance, and Islamic capital markets, ICM, is also part of Islamic finance. So all these are areas which we look at when we talk of Islamic finance as a whole. So therefore the conclusion is Islamic finance is a broader term compared to Islamic bank. Now let me take you quickly through the foundational principles, or the foundational concepts actually. The foundational concepts of Islamic finance are as follows. Number one, the concept of trusteeship. And the concept of trusteeship refers to the fact that Allah subhanahu wa ta'ala has appointed the mankind as a trustee and a vicegerent on this earth, in the sense that the human or the mankind is supposed to be taking care of the creation of Allah, and whatever Allah subhanahu wa ta'ala has created on earth has been put under the custody of the mankind. So he's the one to be taking care of Allah's creation. هو الذي خلقكم في الأرض والذي أنشأكم من الأرض واستعمركم فيها. He, Allah subhanahu wa ta'ala, is the one who has created you on earth, واستعمركم فيها, and he has made you the custodians of this earth. We are supposed to be taking care of everything that Allah has created for us. The second concept in regard to Islamic finance as a whole is the concept of accountability. And the concept of accountability entails that every mankind shall stand accountable in the sight of Allah subhanahu wa ta'ala in the day of judgment. Allah subhanahu wa ta'ala says in the last verse, which was revealed in the Holy Quran in Surah Al-Baqarah, وَاتَّقُوا يَوْمًا تُرْجَعُونَ فِيهِ إِلَى اللَّهِ ثُمَّ تُوَفَّى كُلُّ نَفْسٍ مَا كَسَبَتْ وَهُمْ لَا يُظْلَمُونَ. This is the last verse to be revealed in the Holy Quran. So this verse carries the message of accountability and fear the day that you shall all be returned to Allah subhanahu wa ta'ala. ثُمَّ تُوَفَّى كُلُّ نَفْسٍ مَا كَسَبَتْ. And then after that, every soul shall be accountable for what it has done. وَهُمْ لَا يُظْلَمُونَ. And there shall be no unfairness or injustice done to any person. Kwa hivyo, this is the second concept found in Islamic finance. The third concept, which is also equally important, is the concept of completeness. The concept of completeness states that the religion is one whole and cannot be subdivided. And what that means is that we are supposed to be looking at our religious affairs or our Islamic Sharia as a source of guidance that is complete in all manners and in all aspects of life. This is quite important, especially at this stage of life and during this era where there is quite a substantial amount of effort that is being exerted by non-religious people in order to try and separate them from their religious guidance. Now, when you look at Islam as being complete, that sends you a message that there is nothing in your life that lacks guidance. Kwa kila kitu kina guidance katika dini yetu. The way how we are supposed to live is provided for in the Sharia, the way how we are supposed to be dealing with our financial matters, with our money matters, with our wealth that is provided for in the Sharia, the way how we are supposed to even enjoy our life is also provided in the Sharia. The same way how it is provided on how to conduct our ibadah and our acts of worship. I'm trying to emphasize on this point because currently people are being probably, or there are efforts of trying to brainwash Muslims against this concept and trying to displace them using the concept of secularism, or it's not really a concept, secularism as a movement or as a thought. So Waislamu kidogo kuna msukumo fulani wanajaribu kusukumwa ili wajitoe katika dini, katika masala yao ya kimaisha. Kwa hivyo message ambayo we obtain from this concept ni kuwa dini yetu is a complete whole, and you cannot separate the units in that religion according or as per what you wish. Allah subhanahu wa ta'ala says in Surah Al-Baqarah, Ya ayyuhalladhina amanu udkhulu fi silmi kafa. All you who believe, accept and enter the religion of Islam in one complete whole. Kwa hivyo uweze kusema mimi ni Muislamu, but as far as swala zako are concerned and kufunga na kutoa zaka and so on, that is not enough. That is not a declaration and submission to Islam. Submission to Islam entails that you have to submit in your whole. So the same way you accept to follow Salah and Siyam and Zakah and Hajj, it is the same manner you are also supposed to accept all other guidances regarding your life. Sio katika mambo ya swala ndio Muislamu, kisha tukija katika mambo yetu ya ndoa, mambo ya mali, mambo ya pesa, we follow our whims and we follow the whispers of shaitan. We follow what the secularists are telling us to do. That is not submission to Islam. And that's what exactly means by the concept of completeness. Sababu dini yetu ni complete. Watu wa nyuma were people of Shuaib. They were notoriously known for not being just in measurement. And they were spendthrifts in their wealth. So Shuaib alayhi salam continuously used to remind them about preserving their wealth. And he used to tell them this guidance continuously, until at one point they got furious and they decided to argue with Shuaib. They told him, I'm quoting the verse of the Quran, Allah says, قالوا يا شعيب أصلاتك تأمرك أن نترك ما يعبد آباؤنا. Oh Shuaib, is it that the prayers which you are teaching us are the ones which tell you to tell us to keep away from what our forefathers have been worshipping? أو, and this is now the part that we are talking about, أو أن نفعل في أموالنا ما نشاء. Or is it that your prayers are the ones which tell us how to deal with our wealth? All right? So this is the argument presented by the people of Shuaib. And they were arguing with their prophet in the sense that, Sisi, we are free to do whatever we want with our wealth. So how does it concern you? In other words, it's none of your business. So Shuaib is telling them, no. This is a religion of Allah subhanahu wa ta'ala. And the same way I am telling you to worship one God, Allah subhanahu, and the same way I'm telling you to follow his teachings, it is the same way I'm telling you to preserve your wealth and to be accountable on your wealth, because this is what the religion states. So I emphasize this point a little bit kwa sababu at this point of time, at this stage, watu wengi kidogo wame hadaika ama wametolewa katika compass direction na baadhi ya fikra by being shown kwamba dini yenu hii ya Uislamu, it is just found in ibadah, in your prayers, and once you pray and you read your Quran, and that's it, which is not true. Vile vile unavyoswali ndio you are supposed to be taking care of your wealth to carry out proper and correct Islamic financial transactions. Kila muamala unaofanya ujue utakwenda kuhesabiwa nayo. The same way utakwenda kuhesabiwa ikiwa ukuswali, na ikiwa ukufunga, na ikiwa hukwenda hija, and you had the ability. So it is the same way you're going to be asked about your wealth. Where did you invest? How did you invest? How did you multiply your wealth? Where did you get all this wealth from? And where did you spend it? All these are questions that Allah subhanahu wa ta'ala is going to ask the mankind the day of Qiyamah. Now, from the foundational concepts, we are now moving to the basic principles. And the basic principles of Islamic finance are that, number one, we have the principle of equity. Sorry, it's a bit of a technical. Okay, maybe I think we can go with the screen, because I can see my slides here have almost disappeared. Okay, if you can just go forward a little bit. Okay, these are the concepts we were talking about: concept of accountability and the concept of trusteeship, and now we are at the basic principles. Now, the first one is the principle of equity, and this principle contains the following teachings. Number one, the prohibition of predetermined payments, that is riba. Okay, so under the principle of equity in Islam, these are the principles. And these principles are the general, because we have other principles that are coming. We will call them underlying principles. Okay, these are the general principles for all transactions or all financial dealings that a Muslim is undertaking. So the first one is prohibition of predetermined payments, that is riba. Prohibition of excessive uncertainty, and that is gharar. And gharar means the kind of business that a person does and he's not fully aware of what that business contains or how it's being conducted. Kama vile mtu akikuletea biashara, akwambia kuna biashara fulani hivi na hivi, but you have no details of what that business actually contains or how it is actually performed. When we were making this presentation in the previous session, we had a quick example of what we had previously in our country that carried, quite a number of youth were carried away with this business concept or business scheme, and it was called, I can't remember the actual name, but it was dealing with phone chargers or power banks, phone power banks, That was a common trend that we had previously. Now that's a very good example of gharar, because it's a business that you don't really understand how it works. Ni mtu anakuletea kwambia angalia hii app, unanunua power bank and then you switch it on in your phone. Yani hata in your mind pia it does not make any sense. How do you switch a power bank using your phone? Okay, so you are switching the power bank from your phone, you set it on, and for that power bank, wherever it is going to be on. I wonder how that works. Kisha, while it is working, you are being paid for every 1 hour. And not understanding kwamba that is a scheme of stealing people's money. And it's very obvious because there's very high level of gharar. What kind of power bank have you bought? Ukimuuliza mtu yote ambaye aliingia katika hiyo biashara, can you tell me the details of the power bank? Hata hajaiona inka vipi. How does it work? Okay, fine. Where is it? Where is that power bank right now physically? Where is it? He doesn't know. Okay, so with that high level of gharar, it is an indicator that that business transaction is flawed. It's unlawful, and that's why it went down, it collapsed with people's money. And we, alhamdulillah, at one point of time, we alerted Muslim brothers about this kind of business, and those who managed to pull out, probably I don't know how they pulled out, but it sank with substantial amount of money from our Muslim brothers and sisters. Na hii yote tokamana na ile pupa ya kupapia pesa ya haraka. The third principle of equity talks about wealth distribution. And wealth distribution is a very wide topic in Islamic finance. In Islam, our Islamic religion is very much concerned on how wealth is distributed. Wealth should not be sort of monopolized by particular people or particular group of people. It should be circulating in people's hands, and that's what Allah meant by saying in the Holy Quran, كَيْ لَا يَكُونَ دُولَةً بَيْنَ الْأَغْنِيَاءِ مِنْكُمْ, so that the wealth does not get monopolized within the hands of the rich among you only. So one of the purposes of zakah is that. One of the purposes of doing business, that is another purpose. One of the purposes of charity, sadaqatul jariyah, waqf, and so on, is so that wealth is not contained in the hands of the rich only. Okay, that's a very great principle of equity. And then the second principle in Islam is the principle of participation. This is also a principle in Islamic finance, and it talks about the following points. Number one, we have, can we get the slide moving? Okay, the reward that comes with risk, reward comes with risk taking. So this is a very important principle in participation. And the meaning of this principle is that whatever profit that you're supposed to be earning or you're supposed to be getting, it must be attached to a certain level of risk. That's a very important principle in Islam. There is no profit without risk. And whenever you see a profit coming to you very easily, kama ile button ya phone, you switch on the button and then money comes in and there's no risk that you're taking, then know for sure there is something wrong that you're doing. Because in Islam, for you to get a profit, you have to carry a certain level of risk. Okay? The other point and principle of participation is that this principle ensures that increase in wealth accrues from productive activities. That is, wealth does not come from air. In a similar way how conventional banks operate. Conventional banks operate under the modus operandi of false money creation. So they create money out of nothing. And that's how they make money. So there's no wealth, there's no economic productive activities. It is just lending and borrowing, and that's how money is made. And then next we have the principle of ownership, qa'idatu al-milkiyya, and this principle states that preservation and respect for property rights must be observed. In Islam, we have preservation of property rights. Someone's property must be respected, it must be preserved, because it is owned by that person. And the legitimate ownership is a very important principle in Islamic law. Then the next point is upholding contractual obligations by underscoring the sanctity of contracts. And what that means is that in Islam, all contracts are regarded as sacred. They are legitimate, they are lawful, and therefore they have to be respected. You cannot enter into a contract with another party and then all of a sudden after 2-3 days you decide in your own capacity without involving the other party. You just decide to cancel the contract or nullify, and that is very incorrect in Islam because of this principle of ownership. And then now we are moving to the theoretical and empirical background. Now this is quite technical. I'll just go through it quite quickly. In this background, we want to lay the theoretical underpinnings for Islamic banking and finance. Where is it coming from in terms of theory? Now, previously there have been certain hypotheses presented by, in fact, non-Muslims. One of them is the Minsky's financial instability hypothesis, and this hypothesis is trying to prove that when the economy is working around debts and credits, then at a certain point of time, the economy is going to burst. Okay, this is proven theoretically, and the message from this model or from this hypothesis is that debts and credits does not do any good to the Islamic, does not do any good in any community at any given point of time. Then after that, we have the Meslah's model in 1950, and this model also came to replicate what has been studied before. Okay, it's just a replication of the same model we discussed before. If we can go forward. Then we have, okay, this is the Meslah's model of 1950. Now, I want to take you back to the Meslah's model of 1950. We have Mohsin Khan in 1986. He's an economist from Pakistan, and he did an intensive economic study or research based on the model that was theorized by Meslah in 1950. And he applied, okay, the model of Meslah in short states that if an economy can stay away from credit, from interest, from riba, then the economy is going to prosper. The economy of any community, of any country can improve. Now, Mohsin Khan did this study theoretically, and indeed he found that in Islam that is already taken care of. And he proved in Islam that if we remove the element of interest in an economy, then unlike what many people think, the economy is going to sink, it's going to collapse, or there will be inflation and so on, it's actually the opposite. There will be less inflation and the economy will improve because of the several economic activities that will be going on. Now from there, I want to take you through the salient features of Islamic banking and finance. Now, what we mean by salient features are the main features that are found in Islamic bank that are not found in any other bank, that is the conventional banks. We had at the beginning of the session, we have this preconceived notion by many Muslims that Islamic banks are just more or less like conventional banks. It's just a change of the word, or the inclusion of the term Islamic, and so on and so forth. Now, what really differentiates Islamic bank from a conventional bank? By the following things. Number one, Islamic banks are supposed to, and they are actually interest-free. That is the underpinning rule of Islamic bank. It is supposed to be operating on an interest-free mode. And that's the reason why sometimes you hear a synonym for Islamic bank that goes with the word interest-free banking. But this is not a synonym of Islamic bank, because in the sense that interest-free does not necessarily mean Islamic bank. Islamic bank does what is more than interest-free. Okay, the other feature of an Islamic bank is the need for underlying assets. Okay, so there has to be an underlying asset for any economic activity, for any transaction. in an Islamic bank. And we are trying to mirror this feature with the conventional bank, whereby the wealth is created out of air, out of nothing. So there's no asset that is being involved in a conventional bank. Number 3 is avoidance of uncertainty. Okay, that's another important aspect of Islamic bank, that there has to be zero uncertainty or almost near zero uncertainty. It's true, uncertainty or gharar cannot be avoided altogether at 100%, but then there should be, or it should be kept at a very minimal level. Number 4, another feature is that Islamic banking and finance is an equity model of banking, which means that it operates under the PLS mode. And PLS stands for profit and loss sharing mode. Another feature of Islamic banking and finance is the rights and liabilities of banks and customers have to be respected and have to be also preserved. Okay, so we have rights on one party, we have liabilities on the same party, we have rights and liabilities on the other side. Now, all these rights and liabilities have to be seriously undertaken and seriously observed. Allah subhanahu wa ta'ala says in Surah Al-Ma'idah, verse number 1, Ya ayyuhalladhina amanu awfu bil-uqud. O you who believe, fulfill your contracts. And what that means is keep your promises. When you promise someone you're going to sell a house or a car or whatever transaction based on 1, 2, 3, and there is an acceptance on the other side, then that promise has to be fulfilled. If there is no any preventing measure or there's no any obstacle. At the same time, when the contracts have been signed, and this is the most important stage, after contracts zishakuwa signed, now it should not be in working among the Muslims, or it should not be the impression of Muslims that somebody can just decide to do whatever he or she wishes because he has sold or he has bought ABC. The other feature is number, if you can go next, is Sharia compliance. That is another feature of Islamic banking and finance. It's not found in any conventional bank. And this is the distinguishing factor of an Islamic bank, that it has to be Sharia compliant, that it has to comply with the Sharia rulings. And for that reason, any Islamic bank has to have a Sharia board, a Sharia committee. And this is a team of experts, a team of Islamic scholars who have specialized in Islamic commercial law. And their work is to look at the products and the engagements of the bank, the banking activities, the financial activities, and to judge them using the principles of Islamic law. And that is the work of the Sharia board. And mind you, it is not a necessity or a requirement by the Central Bank of Kenya that an Islamic bank has to have a Sharia board. This is done out of the feeling that this is a responsibility of an Islamic bank. Otherwise, the central banks of most of the countries in the world do not dictate or require that an Islamic bank must have a Sharia board guiding it, especially if the country is non-Islamic, like in our case. But you can see banks do go beyond the requirement of their central banks, and they impose the Sharia board over them. And it should also be noted that the decisions, the resolutions made by Sharia boards are binding and final. When a Sharia board declares that profit A, B, and C derived from transaction 1 to 3 is null and void, then it is plucked out of the banking books. It is plucked out of the profit. It is probably geared towards other activities, if it's charity and so on. This is the normal trend in many Islamic banks. The other one is number 7, avoidance of unlawful goods and services. In Islam, we have certain goods and services that are unlawful and a Muslim should not engage in or should not be dealing with. We have gambling, qimar, and so on. Most of these activities, we also have certain goods and products that are not supposed to be handled by Muslims, unlawful at any stage. And when we say unlawful goods, in Islam, we have two kind of goods that are unlawful, or two kind of unlawful activities. We have the al-muharram li dhatihi, and we have al-muharram li ghayrihi, and or al-muharram li kasbihi. So al-muharram li dhatihi is something that is unlawful in its essence, like, for example, selling or dealing with dead animals. Okay, so you cannot go and buy a dead animal for any reason because it's unlawful. Allah subhanahu wa ta'ala has regarded it unlawful. حُرِّمَتْ عَلَيْكُمُ الْمَيْتَةُ وَالدَّمُ, to the end of the verse. Now, suppose someone comes and say, okay, fine, I want to buy this dead animal, not for my sake, I don't want to eat from a dead animal, but I want to feed it to my dogs. I have dogs in my place, in my farm, and instead of sacrificing every day 1, 2 goats and chicken, there is this dead goat's meat that I want to feed them. And the answer is it's still unlawful. Because what is unlawful in its essence cannot be used in any way. Okay? Khamr is unlawful. That is the wine or the alcohol is unlawful in its essence. So it cannot be handled by a Muslim in any capacity. And then we have al-muharram li kasbi. Al-muharram li kasbi is whereby something becomes unlawful because of the way it was earned. But originally it was lawful. For example, riba or rishwa, that is money derived from corruption activities or bribing. Okay, so this is money that is, it was lawful in the beginning, in its original form. But then it was converted to unlawful because the way how it was earned. When you earn any interest on a principle, that interest is definitely unlawful in Islam. The same way how a bribe is unlawful and it contains a curse of Allah subhanahu wa ta'ala. The same way how riba also contains curses. The Prophet sallallahu alaihi wasallam said, "La'ana Allahu ar-riba wa akilahu wa mu'akkilahu wa shahidayhi wa katiba." So these are the list of people who have been cursed by Allah in interest. It's not only the giver or the beneficiary of the interest, the person who eats, but also the people who write, people who do accounting of interest, who work, who prepare the interest books, they keep the interest records and so on. All these have been cast by Allah in the words of the Prophet sallallahu alaihi wasallam. And similarly, in terms of bribing also, it's haram. And the Prophet said, لَعَنَ اللَّهُ الرَّاشِي وَالْمُرْتَشِي. And in another narration, there's an addition of ar-ra'ish. So in bribing, we also have a list of people who have been cast. The person who gives the bribe, the one who takes, and the middle person in the middle who plays the brokerage part of linking the bribe from one end to the other end. Number 8, the overriding principles of Islamic law. Now, what this feature means in Islamic banking and finance is that Islamic law is always overriding. If we have certain rules that we have kept among ourselves, the bank, let's say for example, Gulf African Bank has its own rules that it has developed at the banking level. Now, it is found by coincidence that these rules clash, for example, they clash with the principles of Islamic law. So what will supersede the other? The principles of Islamic law will overrule and override any other principle. Okay, because these are principles of Allah subhanahu wa ta'ala and His Prophet. And since we are Muslims, we have to submit to all the principles laid down by Allah subhanahu wa ta'ala and the Prophet. Okay, next we are moving to the overview of Islamic banking and finance. Now, this is an overview of the instruments that are used in Islamic banking and finance, and the following instruments are the common ones used. Okay, these are called modes or instruments of financial activities in Islamic bank. Number one, the PLS modes. And PLS stands for we have mentioned about PLS before, but maybe some people were busy with their phones or they were in their own world. Okay, PLS stands for profit and loss. Okay, profit and loss sharing. That's what PLS means. If you can go back a little bit before this. And then we have the non-PLS, that is the non-profit and loss sharing modes. This is where you have the murabaha and بيع تقسيط, بيع بثمن الآجل, tawarruk and all others. These are all called non-PLS. And basically non-PLS mode are all modes which are considered debt-based. They are all considered non-PLS. And then finally we have the fee-based mode, and fee-based mode is a service or a mode of Islamic finance that is based on a fee. For example, hawala, wakala, that's guarantee, agency, contracts. These are all fee-based contracts in an Islamic banking and finance environment. Now we're going to expand or talk about each one of these ones, of these three, quite fast. Number one, the profit and loss sharing modes. The common one is the mudaraba contract. And mudaraba contract is a contract involving two or more parties, depending on what level of mudaraba is being undertaken. We have the 2-tier, we have the 3-tier mudaraba, and so on. Now, without going into all those details, so briefly, what mudaraba means is that we have party A who is providing the capital or the finance, and party B who provides the expertise. Now, in mudaraba, we have one party having the money, and the other party doesn't have the money but has the expertise, the skills of doing work. The one with money provides the one with expertise, doesn't have the money, to work with the money of A. Now, this A, the one who is providing the money in Islamic finance terms, is called mudarib, is called rabbul mal, and the one who takes the money to do business is called mudarib. And this contract is a mudaraba contract. It has rules, it has lots of guiding principles. We are going to talk about them as we move along. And then number two, under PLS mode, is musharaka. Musharaka contract is another PLS mode that is based on partnership, okay, because it's a sort of profit and loss sharing mode. It is a partnership between two parties who partner to do certain business. It also has its own guiding principles, its own limitations and rulings. I am ahead of the slides a little bit. Okay, we have talked about musharaka. Okay, now we are into the non-PLS modes. We have the mudaraba. Mudaraba contract, we'll talk about it in the next session, in part 2 of today's presentation. So briefly, mudaraba contract is now a non-PLS because it's a debt-based, okay, contract. It's a contract based on credit, based on a debt. So that facility taken by a client or an individual gets into a debt arrangement with the provider or the financier in this case. We shall talk more about murabaha today's presentation. Then we have the ijara contract. Ijara contract is a lease. the rent contract, where by one person, the lessor offers a product to the lessee in exchange of a certain amount of money that is paid as or under ijara arrangement. It has also its own limitations, its own guiding principles and rulings. Now, finally, the fee-based modes, and these are, number one, the wakala contract, as I've said before, and wakala refers to the agency contract. Agency is a very common contract in Islamic law. One person appoints the other to be an agent, and there is a fee that is being accepted between the two. This is the mode of contract that is being used today to operate many or a number of deposits or accounts in Islamic banks. The Islamic banks run most of them, most of the accounts of our deposit accounts. Not all, but quite a number of them are being run under the concept of wakala contract, the agency contract. And then we also have, after wakala, if you can, the kafala contract. And kafala is a guarantee contract, okay, whereby one person provides guarantee to another person. Let's say Sister Shamsa wants to buy certain goods from abroad to import, but is not in a position to provide the financial capacity. Now, one party comes, in this case the financier, the bank comes and says, fine, I will provide the guarantee for these goods that are going to be imported. And the bank normally charges a fee for providing that service. And how this is done or is conducted, the details and the processes, if we have time today, we can cover most of these modes in today's presentation. This is just to highlight, as I said earlier, overview. We are not going to details now. After this, we have the basic differences between Islamic bank and non-Islamic bank. I think this is quite general. We have mentioned some of them as we were discussing. The difference between Islamic and conventional non-Islamic bank. We have the common one that is known. Islamic banks operate as or as interest-free and many other aspects, but it's not only interest-free, as I said earlier. We have looked at this, the common or the salient features of Islamic bank so that you can trace and know what are the major differences between Islamic and non-Islamic. So it's not about that Islamic banks hawana riba and that's all. It's more than that. As I said earlier, Islamic banks are guided by Islamic Sharia principles. They have Islamic Sharia board. They don't deal with unlawful activities. They don't engage in unlawful products and so on. So all these are the common guiding features of Islamic bank and finance. The next one are the common misconceptions. And these include, number one, the fact that, or the understanding, some people do understand that Islamic finance is meant only for Muslims. That is not actually the case. Islamic bank and finance is available for all faiths. In fact, this product should be sold to many non-Muslims, as many non-Muslims as possible, so that they can try to explore the beauty of Islam and how Islam has perfected the art of business transactions, business dealings based on honesty, integrity, transparency, certainty, and all other features. Whereas on the other side, when you talk of conventional finance or finance which is non-Islamic, you are going to see the opposite of what we have mentioned. There is a lot of opaqueness, lots of non-congruence with their general principles, as well as a very high element of uncertainty and risk involved. The other misconception people have is Islamic banks are a replica, copy-paste of conventional banks. We have mentioned this before. Some people tend to think that it's just a change of word. You have removed the word interest and put profit and so on and so forth. Now, these are words probably some Muslims could be saying, but it's understood because these words can only come out from a person who has not explored Islamic finance and Islamic banking, hasn't studied anything. So you may find people coming to this blanket conclusion, which is irrational. But for a person who has looked at Islamic banking and finance, at least theoretical, okay, probably what banks do may be a different story, but that shouldn't make you make a general statement that we don't have Islamic banking and finance. You will be doing unfairness to the Muslim scholars who have really spent ages and decades to develop this field. The other one is that you cannot make profit without riba. This is another very big misconception, and this misconception is being spread and sold by non-Muslims. Okay, they tend to make Muslims feel that you are trying to convince us that you can operate a bank without interest. Now, you cannot have that kind of arrangement, and they try to make people get stuck in that concept or that feeling that banks can only operate using interest. Okay, and when it comes to money matters, you can only do that also using interest, which is not actually the case. We have demystified this concept before. Number 4, can move forward, is that this is a very common challenge. Islamic banks are regulated by central banks which lend on interest. That's another area where many Muslims, you can find them holding some reservations regarding Islamic banks. And they tell you, how can we have an Islamic bank operating in a non-Muslim environment? Islamic banks operating in a country that is completely and fully regulated by central banks which are entirely dependent and running on interest. Now, from the first value, this statement is true. This statement is true. Islamic banks are operating in a non-Islamic environment, like in the case of Kenya. It is not holding true in all countries in the world. We have countries that have split their regulations, like Malaysia, whereby they run dual systems in their central banks. In Malaysia, the Bank Negara Malaysia, Central Bank of Malaysia, it has 2 regulatory windows. One for conventional and one for Islamic. And the one for Islamic is running purely on Islamic principles, while the one on conventional, it is using the conventional laws. They have gone to the extent of even developing their own standalone Islamic Banking Act. Islamic Banking Act in probably 1986, that is when it was promulgated in the parliament. And then it was improved and amended at several stages. So this, at this level, at least, alhamdulillah, you can see there's a lot of work being done. But that doesn't necessarily cast doubt in an environment which is fully non-Islamic, like in our case, and many other countries, Tanzania, Uganda, the whole of East Africa, and many countries in Africa, with the exception of probably Sudan. Previously, they had also attempts of developing dual regulations like Malaysia, but I'm not really sure how far they've gone. Now, does that really make Islamic banks non-Islamic? The answer is no, it's not. That is not enough to sustain the premise or the notion or understanding that therefore these banks are non-Islamic. It's not true. You really need to get down to research and do your study well in order to come up with the understanding that an Islamic bank can operate in a non-Islamic environment given certain leeway or certain provisions which are within their room or their liberty. I do understand, I am also alive to the fact that there are hindrances which Islamic banks face in such environments like the one we have in Kenya, whereby banks do report to the CBK, which is non-Islamic. There are hindrances, there are certain obstacles, but that doesn't make us come up with a general statement that since we are under CBK, it's not Islamic. That is not a genuine statement, or at least a statement that is value loaded and said without consideration. The other one, I think riba is acceptable if it's not excessive. We're going to talk about this today, inshallah, so I think we can just move on. Riba is acceptable on production loan. We'll also talk about this one today, inshallah. I hope we have time. Now, some challenges of Islamic banks and finance. Number one, regulatory and supervision of Islamic banks. That's a challenge, as I've said earlier. We have this challenge, not only in Kenya, but in many parts of the world. How Islamic banks are regulated, how are they supposed to be supervised? There is a certain level of challenge contained in them. Number two, harmonization of Sharia standards. Most of the Sharia standards have not fully been harmonized in many parts of the world. You can find a certain bank has approved a certain product which is considered unlawful in another Islamic bank. We have that scenario. You can find a bank that has fully adopted product A, and when you go to another bank, probably in the same country, they will tell you we don't operate using product A because it's unlawful. Now that puts you in a state of worry. Then if you're saying this is unlawful, how is the other bank adopting this product or this service? Now this is as a result of lack of harmonization of the standards amongst the Islamic banks, even though there is a lot of effort that has been done since the inception of AUFI. And AUFI is an international accounting and financial standards board that was developed specifically for Islamic banks in the world. It is based on Bahrain, with its former chairman Mufti Taqi Osmani of Pakistan. So this is a body that does really tremendous job in developing the standards, the regulations for Islamic banks and Islamic finance. Not only Islamic banks, even Islamic finance like Takaful, Islamic insurance, the Islamic capital markets, the sukuk, the bonds. Sukuk are the bonds in Islamic terms. Any sort of a bond is also falling under the same regulation and standardization. The other challenge is product innovation versus Sharia compliance. Banks are looking forward to become innovative. Every day they want to come up with new product. But then there is a catch to that. And the catch is there is Sharia compliance rule. Okay. Now how should the bank balance between product innovation and Sharia compliance? Does it mean that when a bank wants to become innovative in its products, it's not going to be Sharia compliant? Not necessarily so. Does it mean that if a bank is Sharia compliant, then that means it should not be, it's not going to be productive and innovative? It's not necessarily so. So we are going to see, probably if we move deeper in this presentation, probably at other levels, you're going to see that a bank, an Islamic bank, can actually merge and combine between product innovation and at the same time be Sharia compliant, as long as the rules and the guiding principles are observed. And that brings us to the end of the first presentation. I welcome any question or any query before we go into the second. Now, is there anyone who has anything to ask? It is also like a break, so that I can also get a break from talking. Now, you can ask, you can write. Now, MashaAllah, this is a long list of questions. Shukran. No? Okay.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam.
Now, first of all, I would like to use this opportunity to thank you for the presentation so far, and also the organizers of this current talk which we are having today, because it's been very, very educative. I come from an educational institution, and in Kenya, our students normally receive the higher education loans. We know very well that this is money which the government gets from when we pay our taxes, and every Kenyan has a right to education. So the needy ones are supposed to get the HELB loan. And once you are through and you start working, you are supposed to pay, to return this money with 4% interest. You've talked about agency fee, whereby you cannot receive money because there's some administration costs and so on. Our current interest rate is actually 13%, yet these students pay 4%. How do you justify that? That's my first question. So is it okay for Muslim students to accept the HELB loan? And if, maybe that's the first question before I go to if. My second question is on, you talked about that whatever money you get should be Sharia compliant and should be justified. But most of us who are in public service, there's an element of, we normally pay pension, and when we retire, 1/3 of the money you are given as lump sum. Then there is the 2/3, which is annuity. Now, when that money is supposed to be invested in financial institutions, whereby you now get a monthly income. Now, when because now in Kenya, we do not have an Islamic institution who deals with those annuity. As a Muslim, what do you expect us to do? Thank you.
Shukran. Is there any question coming in so that you can go to the second part? Okay. Thank you for the ones who have just presented these questions. And from where I am, I think some or most of these questions are meant to be discussed in the second part of my presentation. The first part was meant to give you an overview, an overview look into the Islamic banking and finance. It was not meant actually to go into details. Just to mention to you some concepts, as I said, some principles, some salient features of Islamic banks vis-a-vis the non-Islamic banks and so on. Now, these questions which have come up here, they are quite technical, some of them. Somebody's asking, I'm concerned about your financing and interest in relation to finance. I don't understand the word "your," because if the questioner thought that I am Gulf African Bank, then she is wrong. I'm not Gulf African Bank. I'm presenting this independently, and as I said earlier, maybe she was late when we were making the disclaimer. So I'm not talking on behalf of Gulf African Bank. This is a general session of learning and knowledge. So about financing and interest in relation to Islam, we are going to talk about interest today. Kindly enlighten on Islamic banking and loan facilities available to empower etc. We'll talk about this. Are you able to recite some Quranic verses and hadith to support your argument about Islamic banking? I've not made any argument about Islamic banking. I've presented principles, and most of the principles we have recited verses, unless the questioner was late or she was busy with her phone. But we had recited here several verses of the Quran. For every principle, there was a verse. If you remember, we talked about principle of accountability, principle of trusteeship, principle of completeness, and all these principles were backed by verses from the Holy Quran. In relation to Islamic banking itself and finance, we shall talk about it today in this session, and you shall hear some of the verses regarding Islamic banking and finance. But part of this we have already mentioned before. This question was not written well. I cannot really understand it in terms of percentage of financing value. I think the question is talking about the rate of financing that is adopted by some Islamic banks, and that is an area which many Muslims are in doubt of. That is, an Islamic bank is using a similar rate that is being offered by a conventional bank. Now, does that make it unlawful? That's what Muslims think. They say yes, because if you go to Islamic bank, they will tell you our rate of return, rate of profit is say 13, 12, 11, whatever, depending on that instrument used or that facility given. Now, you walk into a conventional bank, you are going to get a similar rate, and if you're a good bargainer, you can even get a lower rate of finance. So does this make or lead us to the conclusion that therefore Islamic banks are unlawful? The answer is no. There is details to that. We are going to talk about rest given the time, inshallah, today. If Islamic banks are not carrying out business according to Islam, does the sin fall upon the Sharia board? If Islamic banks are not carrying out business according to Sharia, does the sin fall upon the Sharia board? Okay, this requires us to look more into the Sharia board. What are their roles? What are their duties? What are their rights and their responsibilities and liabilities? Of course, they carry a very high level of responsibility when it comes to banking operations. But do we hold the Sharia board members as responsible for any flaw or any error done by a staff in a line of business or in one of the departments? That will come out clear when we explain about the Sharia board. But maybe just to shed some light here is that there are mistakes done by banking staff. I'm not necessarily talking about Gulf. It could be any Islamic bank that is making an attempt of employing Islamic banking laws. So a banking staff can do that error, can do a mistake in presenting a product to a client. Okay? I have personally gone to find out what could lead to this kind of mistakes, and one of the reasons was eloquently or in a very good way presented here by Sister Shamsa when she was making her opening remarks. And she said most or almost all of us, that is banking staff, are coming from the conventional side. So what that means is that there are still some points that are still attached in the minds of those who work with the conventional banks, and when they come to the Islamic banks, they still have that understanding of some principles, and they get it incorrect. Now, they may pass that message wrongly to a client, or they may understand it in a way that is not correct. And when that comes out, it can be corrected. That stuff stands to be corrected, and the matter clarified from the Islamic side. Okay. Okay, this is the same person. I can tell from the same handwriting, inshallah. The questions are still coming in from the same person. Is it haram to buy shares? We'll talk about shares if we have time, inshallah. Home ownership, home finance, home mortgages. If we get time, we'll talk about mortgage, inshallah. What about security bonds? I don't know, sisters. This presentation was supposed to end at 12:30 or 1. And with these questions coming in, bonds and shares and mortgages and everything, this is supposed to be a 1-week presentation if you want to learn about all this. And again, I suspect the sister came late. Again, I suspect. If it is not, then it is the other assumption, which I don't want to repeat. I said at the beginning, sisters, that this is there was a disclaimer we gave. And the disclaimer is, this presentation is not meant to be comprehensive. by all measures of the word comprehensive. Because number one, given the vast or the richness of the topic, the way how wide it is, it's technically impossible to cover Islamic banking areas in just one sitting. Students spend years to arrive at the full correct knowledge of Islamic bank, as I said earlier, be it undergraduate or at master's level, at PhD level, or at any other level. So people do spend quite a reasonable amount of time to study. And that's the reason why I said, let us take this sitting to be introduction. And I say that with a purpose, and the purpose is you should have an expectation in terms of learning outcome. What is the outcome of this sitting? So I don't expect you to come out of this hall today, you are an expert of Islamic bank and finance. You have understood all these areas, you have known how PLS works and how security bonds work, how sukuk, how shares, how everything, how stocks work in Islamic finance. Maybe there'll be another question coming on contracts and futures and swaps and everything. That's not possible. This is an introduction. You can see from the name, Introduction to Islamic Banking. And so kindly let us stick our minds to that introduction. I know that this is a very good indicator. It shows that people are thirsty of this knowledge. They want to learn more. And that is a message and a challenge we are sending to our hosts, our organizers. Maybe they can slot other timings and other sessions to come, inshallah, probably next year, so that we take this knowledge step by step. It's a very good initiative. But let us be very honest. We cannot cover everything in today's sitting. And most of these questions asked, technically not possible to answer. And now this sends me back to my original presentation. The reason why I am taking you through principles, I want to repeat this over and over so it gets into your mind. The reason why I have started discussing Islamic banking and finance right from the basics, from the foundation, from the concepts, is for you to understand where Islamic banking and finance is coming from. It was very, very easy for me, and probably it would have been simpler on my side if I came here and my first slide starts with murabaha, because that's what people want to know. People are interested to know what murabaha is and how it works. Is it halal or not halal? Then slide number 2, or after 3 slides, I talk about mudaraba, then I talk about credit cards and home mortgage, and that's it. So that presentation will not take anything more than half an hour. But you will come out of this hall with only 2 things. Yes, no, halal, not halal, and that's it. You're not able to reason If it's halal, why halal? If it's not halal, why not halal? So we are here for the knowledge, and that's why we have taken you through all this journey. And I want you to appreciate that approach, because we have some brothers and sisters from the other side or behind the background, maybe in following us through our live stream. Maybe they are eagerly waiting just to know whether murabaha done by Gulf Bank, is it acceptable or not? Okay, and maybe someone has a particular issue with the bank. Something happened at one point of time with him or her or his family member, so he really wants to know what was done, whether it was correct or not. That's not the purpose why we are here. The main purpose, as you have heard, is to share the knowledge, and this knowledge is vast. It just needs a little bit of patience. You need to be patient, but it is good you learn a little, but you learn it in the proper way and the right way, than bombarding you with information and the rulings of Islamic scholars about murabaha, how it works, A, B, C, and D, and the ruling is X. You won't really benefit the way you are supposed to. So I think with these remarks, before I proceed, there was the question from the floor. One of the sisters was asking about help. Help loans are loans provided by the government to students who are undertaking higher learning or learning at higher level of institutions, universities, colleges, and so on. Now, her question was clear, as you've all heard. The government is providing these loans at a certain rate of interest. Are these loans lawful to be taken by our students or not? I also kindly ask the questioner to be patient a little bit. We are talking about interest today, about riba. And we have misconceptions about riba, the types of riba that will come under that. But lest I forget, I also need to mention that this is an area which a group of Muslim scholars in Kenya are looking at currently. We have about 3 issues on the table right now we are studying, and one of them is the NHIF facility, also under the government, which is an insurance facility for health services. So should and can a Muslim benefit from this facility or not? That is a matter that is being discussed and studied by a group of Muslim scholars at national level in Kenya right now. And the other one is help loans, the loans provided by the government. Okay, so I will give you a general guideline regarding these concepts, but I don't want to take you through the final verdict, because it is still, as I said, it's still being studied. And once the verdict is out, inshallah, it is passed or the Muslim scholars resolve unanimously by that committee, then inshallah it can be made public. But then in the meantime, since it was asked, I'll give you the general guiding principles of how that is, where that stands in Islam. Okay, so presentation number 2, the second session, is understanding Islamic banking, part 2, and our content layout is the following. Number 1, underlying principles of Islamic finance. Number 2, Islamic banking activities. 3, common misconceptions, and 4, Q&A. So I've kept this one a little bit shorter because I was considerate of the time limit that is left, and I don't want to fall into what we had before in the previous session. It took us up to around 3:30 p.m. So inshallah today, I hope by Dhuhr, we will be done, inshallah. Okay, so the first one is some underlying principles of Islamic banking and finance. Now I said underlying principles. Now you remember before we had principles, now those were general principles. Now these principles are particularly meant for Islamic finance. And that's why we call them underlying principles for Islamic banking and finance. Principle number one is the principle of permissibility. Okay, we are moving along as we are waiting for the slides to appear. A principle of permissibility. Now this principle states in Arabic language, al-aslu fil buyu' al-ibaha. So I want you to listen carefully. And normally in such a sitting, when I was coming, I was expecting almost every attendee to have a notebook and a pen. That was my expectation. But then when I came here, I discovered that, mashallah, the participants are very good memorizers. They take this knowledge by heart, just like Imam al-Bukhari, how he was. So I wish that is the case, because I am putting forward a lot of information, and alhamdulillah, knowledge, but I don't know how it is being taken, with the exception of a few who are writing. Okay, now, but my advice is whenever you come to such a sitting of where you are supposed to be learning something, then it's always advisable to carry a pen and a paper so that you can jot down some points. Even if you are to rely on the slides, you say maybe I'm going to take the slides from the hosts, the organizers, then be rest assured that not all the information I'm talking about is found in the slides. The slides are just containing the general principles. Okay, so principle number one is the principle of permissibility. Okay, and this principle states in Arabic, al-aslu fil buyu' al-ibaha. That is, the default status of all transactions in Islam is permissibility. And this is a very important principle in Islam. Okay, I think okay, move forward. Okay, that was okay. This is principle number one, the principle of permissibility, which states al-aslu fil buyu' al-ibah. So the default status of all transactions is permissibility. If you do one more click, we will have the translation of this. Yes. Okay. So the default status of all transactions is permissibility. And this is a very important principle in finance. And the meaning of this principle is the starting point of any transaction is mubah. That's the starting point. Okay. Now, how is this principle helpful to us Muslims? Inatusaidia vipi? These are called legal maxims or Islamic fiqh maxims. Okay, I want you to pay more attention on this because it's now going to get a little bit technical. So in Islam, we have what we call al-qawaid al-fiqhiyya, or the Islamic legal maxims. And what it means, as I've said, is that we have certain guiding maxims whereby they act as your starting point. And they are helpful to Muslims in the sense that whenever there is a doubt regarding a particular undertaking in Islam, then we always refer to the legal maxim. Now let me put this in context. Kwa mfano, kuna watu wawili wanabishana. They are arguing about a certain thing. Is it halal, lawful or not lawful? Is this business halal or not halal? Is this engagement acceptable or not acceptable. Right. Now, the default rule is that it is acceptable. And that becomes our starting point. Okay? Now, what we need to look at is there anything that has made it non-acceptable or unlawful? If there isn't, then that's it. So kwa mfano watu wawili wanabishana, Zainab and Maryam, about business X. So Maryam is saying this business is halal. Zainab is saying it is not halal. Neither of them, none. Zainab, Maryam, both of them, none has any dalil. There's no evidence to prove that it is halal or not halal. So what is our default status? Our default status remains that this business is valid, is halal. So the answer is we move on with the business. Now, suppose Zainab has doubts about the business. We will ask Zainab to bring evidence that invalidates the business. But we won't ask Maryam to bring evidence that the business is halal. Are we together? Now, I'm referring to the questioner, one of these questions here, Kim. Do you have evidence in Quran, Sunnah to support Islamic banking and finance? I think you already have the answer. So the answer is any business undertaking in Islam is halal, is mubah. You shouldn't have any worry on that. Now, if someone comes and tells you this is not halal, then that person is the one who is required to produce evidence that it is not halal. Sio wewe, you should provide evidence that it is halal. No, it is halal by default because it's business. Are we all clear? I'll give another example. A similar rule applies in terms of eating and drinking. It says, al-asl fi al-ashya al-ibaha. The default rule in everything that is eaten and drunk is mubah. So suppose two people argue regarding the legality, the lawfulness of a certain food. Is it halal or not halal? People are doubting. Okay, because if it is haram, we have the evidence. If it is halal, that's the default rule. Now, these two people argue, A and B, regarding a certain particular food. So whom do we ask to come up with evidence if it is haram? It is the one who says that this food is unlawful. But the one who stands with the position that the food is halal and mubah is not required to produce any evidence because that is the default status. Now, having understood this point, we are having at the back of our minds that all transactions undertaken by any person, be it a bank, be it any institution, an entity, whatever, all those transactions are halal. Full stop. Now, if you have doubt, you have to bring evidence that this is unlawful and proof that this is unlawful. But you don't come to a business person or an entrepreneur or a bank for that matter and ask him or her to produce evidence that what he or she is doing is halal. Am I clear on this? Okay. So, having understood this principle, now we are going to something else that's equally important because we have mentioned in our principle the word buyu. And buyu means transactions and contracts. Now, very quickly, let us look at these contracts. What are they, what they comprise of, and what they entail. So, number one, all business contracts are called uqud. So, I want you to picture with me that as I'm showing you in the background. So, there is a circle there, but I think maybe due to lighting, it's not clear. So, under the word uqud, it is a big circle that comprises the following. So we have al-mu'awadat, we have al-tabarru'at, we have al-tawthiqat, and we have al-musharakat. So all these are types of contracts, types of transactions in Islam. Okay, so when you hear the word contract in Islam, it's a very vast word that covers uqud al-muawadat, meaning contracts of exchange, uqud al-tabarru'at, meaning contracts of benevolence, of kindness and generosity, and then uqud al-tawthiqat, meaning contracts of assurance, and uqud al-musharakat, contracts of equity. So all these are contracts, and under each type or aspect we have lots of other sub-branches. Now our interest in all this is uqud al-muawadat, and uqud al-muawadat, we are interested in talking about muawadat in particular because this is where we are going to talk about buyu', that is trade and business. So under uqud again, as I've said earlier, we are talking about al-muawadat. Al-muawadat means contracts of exchange or commutative. In Islamic finance terms, is called commutative contracts. And commutative contracts are comprising of three contracts. We have al-bay', we have ijara, and we have ju'ala. Bay' is a contract of sale, the normal contract of sale that is being undertaken by many people today. We have ijara, that is the lease, the rental contract, and we have ju'ala, that is an award contract. The same way how a tender is awarded, or probably a certain reward is put on a certain service, but it comes as a form of reward, not actually a service, not actually exchange. It's a reward given on a particular service. Okay, so types of commutative contracts we have finished. Now, under commutative contracts, that is uqud al-muawadat, we are now getting deeper into the muawadat, that is the commutative contracts, and one of the aspects of contracts of exchange is bay', that is buying and selling. Okay, as I said, we are getting now more technical as we move ahead. And this is where now I want your attention to be much closer. Now, contracts of contracts of bay'. Okay. Now, types of bay'. Now, this bay', under it we also have certain types. Bay' is not one type. We have several types of bay'. We have bay' naqdun bi'arad, and we have bay' al-muqayada, and we have bay' al-sarf. These are the three major types of bay' we have in Islamic finance in general, also Islamic banking. So bay' naqd bi'arad is buying or exchange of cash for a commodity. That is called bay' naqd bi'arad. That's a normal kind of sale that we undertake. Then we have bay' al-muqayada, and muqayada is what is commonly known to you as barter trade, exchange of goods for goods or commodity for commodity. And finally, we have bay' sarf, that is exchange of cash for another cash, or currency for currency. Okay, so these are the common types of bay' that fall under contracts of exchange, that is uqud al-muawada or commutative contracts. Now, this classification of contracts we made before, that is naqdun bi'arad, bay' al-muqayada, and bay' al-sarf, it is a classification based on what is being exchanged. Okay, because whenever there is a buying and selling, or there is an exchange contract, there are two parties involved. Sometimes could be more than two, but generally there are two parties involved based on the generic format of a contract. Now, the first party is called muta'aqid or aqid, and the other party is also called aqid. And the two things that they exchange, one of them is either known as a thaman, and the other one is known as a muthman or a sil'a. And those two things that are being exchanged are called mutabadilain. And the finance term for this tabadul is known as counter value. And these terms are quite important. We will need them when we talk about riba at a later stage. Okay? So remember these words. We have party A in a contract. We have party B, aqid and aqid. And then we have ta'aqud, that is the contract between them of exchange. And then we have al-mubadala, that is the counter values that are exchanged. Now, counter value 1 can be, let's say, cash. And the counter value 2 can be object. And object here means the commodity that is being exchanged for cash. Now, we have another classification of contracts by looking at time, the time of payment. When do you pay? Now, by looking at when do you pay in that contract, we shall come up with 4 other types of contracts. So the first one, we had 3 types by looking at what is being exchanged. If it is cash for cash, currency for currency, it is bay'u sarf. If it is a commodity for commodity, that is muqayada. If it is a commodity for cash, that is naqdun bi'arad. Now, another classification of bay' is by looking at the time frame. When do you pay? If you are exchanging cash for a commodity, for an object, on spot, that is the same time you are selling is the same time you are taking the goods, that is called bay'u al-ajil or bay'u al-hal. It has 2 words. You can either say bay'u al-ajil with ayn or bay'u al-hal with ha. Okay? That is when you exchange on spot. It's called on spot sell or on spot buying and selling. Now, suppose you are buying now, but you're going to pay later. Okay? That is called al-bay'u al-ajil. Now, this time with hamza or with alif. Remember the previous one was ayn, bay'u al-ajil, and this one now becomes bay'u al-ajil. So bay'u al-ajil is whereby you buy something, you possess what you're buying now, but you're going to pay it later. In English terms, or finance terms, is known as a deferred sell or deferred contract. In class 3 is whereby you pay now and you're going to collect your commodity later. Okay, the opposite of 2. And that one now is called bay'u as-salam. Bay'u as-salam, S-A-L-A-M, sin, lam, mim, all of them with fatha. So bay'u as-salam is whereby you buy something and you pay upfront, but the commodity will be collected at a later stage. It can be after 1 year, after 2 years, and so on, for reasons that are known in Islamic Sharia. And this kind of sale was particularly in the classical literature, was particularly meant for buying rutab. And rutab is refers to the dates when it is in its early stage, whereby it's being eaten as a fruit. And Arabs used to enjoy dates more when it is at that stage. It's more like a fruit than tamr that we know it. Tamr is after it has dried, it has changed its color and has become dark. But when it is still, it is beginning to ripen, it's called rutab. It's juicy, and that at that time people use very much to prefer to have it at that stage. Now, what used to happen is people used to pay upfront for a certain quantity of rutab, and the farmer will promise the buyer to collect the rutab after 1 year when it's going to be ripe. So he becomes the first buyer for that commodity. The final class of buyer in terms of when do we make the payment is when you pay later and you collect your commodity later. Okay. Now the general ruling for all this is Islam, the Islamic Sharia law allows type 1 type 2, and type 3. Bay' al-hal is permissible, Bay' al-ajil is permissible, Bay' al-salam is permissible. What is not permissible in Islam is Bay' al-kali. That is to pay and collect the commodity at a later stage. For example, someone has a car and tells you, okay, I have sold you this car, but I'm still going to use it for the next 1 year. But let us finalize the contract right now. We agree everything and the price, and you sign and everything. Okay? So you accept to that contract. You sign that you're going to buy the car after 1 year, but the owner has not sold it, but you've bought it. Okay? But he has not really transferred the ownership of the car to you. He shall do that after 1 year, and when that time comes is when you're going to pay. So that is called Bay'u al-Kali bil-Kali, which is unlawful and not accepted by ijma', by consensus of scholars. Okay. Now, we are moving quickly to principle number 2, and this is called principle of validity. Principle of validity states that لا يصح البيع إلا باجتماع شروطه وانتفاء موانعه. A transaction is valid upon fulfillment of its conditions and the absence of barriers. Any contract in Islam, any kind of bay' in Islam has conditions, and these conditions have to be fulfilled. And in certain cases, we have barriers, obstacles, and these barriers and hindrances have to be removed and eliminated. And once that is done, the contract will be rendered as a valid contract. Without it, then the contract is objectionable in Islam. If one of the conditions is not fulfilled, is not met, if one of the hindrances or obstacles is still standing as an impediment to that contract, then the contract is rendered invalid. And thus, that takes us now to another aspect of bay'. We are trying to be a little bit faster due to considering the time limit. Now we are moving to Arkan al-Bay'. And Arkan al-Bay' is the pillars of bay', the components of bay'. Now, bay' becomes bay' when it has 3 pillars. It has 3 major components. Number 1, al-aqidan. Number 2, al-ma'qudu alayhi. And number 3, sighatu al-aqd. What that means is al-aqidan, the 2 parties who are involved in the business transaction or contract. And number 2, al-ma'qudu alayhi, the items which are contracted on, with, be it the cash or the sil'a, that is the commodity or the object. And finally, sighatu al-aqd is the format of the agreement or the format of the contract which people are undertaking. So all these 3 make up a valid contract. If any of these 3 components or pillars is dropped, then that bay' or that contract is considered invalid. Okay? You have understood al-aqidan, I've explained, al-ma'qud alayhi, the items. Sigha is the what we call the offer and acceptance. Offer comes from one party, offers, and the other party accepts, right? Unfortunately, this is mostly narrowed or strictly understood in a particular setup, and that is only the setup of nikah or marriage. It is where you hear the Banarusi saying, or when he's being told zawajtuka, and he says qabiltu. So that is a very good example of offer and acceptance. All right. Now, the person offering the offer of marriage, who is making the offer for marriage? Because the husband, the person who is wedding the lady, he says qabiltu, I have accepted. So who made the offer? Some of you have been married, you don't know who made the offer to you. So it's quite sad. It's quite sad if you don't know who made the offer to you. You are just married and you say it, and that's it. So someone said qabiltu, but you don't know why he said qabiltu, and he said qabiltu to who? And that person whom he said qabiltu to, who is he? What is he related to you? And how? So suddenly you find yourself in marriage, but you don't know how. Okay, that's homework. You're going to find out how did you get married. All right, so sigha is offer and acceptance. So there is offer and there is an acceptance in any business transaction. Then we are moving to shurut al-bay'. Shurut al-bay' are the conditions of bay'. And these conditions apply to the two parties, A and B. There are conditions which both of them two have to meet. Both of them. Condition number one is a riba. Riba is the acceptance or the consent. Okay, the consent, and that's the reason why in any contract there has to be consent. You remember that's the reason why in many I'm going back again to nikah. In many nikah contracts, before the nikah is made, you will find the qadi going to the bride's home and asking her. What is he asking her? He's asking her for her consent. And that's what we call riba. Because no contract can stand without riba, without consent. And that's the reason why you are told in Islam, even in marriage contract, if a girl is married without her consent, then that marriage is not valid. So the same case applies to all contracts in Islam, whether it's financial, banking, and whatever. When someone is forced without his consent, then the contract is invalid. Number two, the other condition of a contract is al-ahliyya. And ahliyya here means the eligibility of a person to do business. Okay? The dalil for riba in the Quran, Allah subhanahu wa ta'ala says, يا أيها الذين آمنوا لا تأكلوا أموالكم بينكم بالباطل إلا أن تكون تجارة عن تراض means consent. So you are not allowed to eat anyone's property or to take anyone's property except after the consent of that person. So that is the law in Islam from the Quran. The other one is eligibility. And eligibility is the person undertaking the contract must be eligible. And eligible here means must be of sound mind, must be mukallaf in the sense that he is able and legally allowed to carry out the contract. And number three, knows how to deal with money. Now, sound mind itself is not enough. Sound mind might be a bit narrow, but in Islam, when you talk of eligibility, we have a meaning that is wider than that. Now, if someone is of sound mind, but then doesn't know how to control the finances that he has or the money, then that person is regarded as safi. And in Islam, we have safi of two types. Safi, that is an ignorant person, or okay, I'm going to use a harsh word a little bit, it's a stupid person, but it's of two levels, okay? We have a general safi, that is a person who is safi in everything, okay? And we have safi in money matters. Safi in money matters is whereby, suppose a husband leaves, let's say, 15,000, 20,000, maybe almost his entire salary minus the rent. He's given it to his wife. That is after the first month of marriage. And he wants to determine and measure the level of intelligence. Money intelligence, how does the wife deal with money matters? So he's left all this money with the wife. Okay? And what happens is after 3 or 4 days, the lady says, the money has all finished. Now what happened? He takes the husband to the room and shows him 2 handbags and 3 pairs of shoes and makeups and cosmetics and so on. Now this lady automatically is put under the class of safi. Okay? She doesn't know how to deal or control money, and therefore the husband will be qualified to say, I will not give you money anymore. It's better I control myself until I take you to a training course on how to handle money. It's not an insult. It's not something bad. In Islam, people may take it negatively, but this is what the Islamic law says, okay? That we are accountable for the money that we own, and what Allah has given us. Okay, forget about the nonsense that people talk about every day, that this is my money, this is my wealth, I can do whatever I want with it. This is all nonsense in Islam, and it's not acceptable. We have provided evidence at the beginning of the session today. Due to time factor, I cannot go back to that. Number 3, al-milk. The third condition is al-milk, and milk means ownership. You have to own what you are selling. You have to own what you're selling, and the money that you are buying with, you also have to own. This is extremely important. One of the reasons why we are meeting here is not only to discuss about Islamic bank and finance. We're talking about Islamic finance in general. And one of the aspects where many people go wrong is about milkiya, ownership. We have online businesses today, which are being run in WhatsApp, Instagram, and many other social media platforms. And what happens, that is what is done by a number of Muslim sisters and probably men, is that they post goods on the platform, be it dress, be it makeup kit, clothes, whatever is being posted online, Instagram, WhatsApp. I'm selling this. Now, the truth of the matter is that the person posting the pictures is not owning those goods. The goods are still at the shop. So he or she, and mostly it's a she, okay, what they do is they sell these products using the pictures in the social media platforms. I'm selling this is new arrival, this is new, it has just arrived from Dubai. Wallahu alam, it is true or not. Now, a potential buyer gets attracted to the picture and places an order. Am I right? When he or she, mostly it's a she here, places an order, she is required to make an upfront payment. She's asked to pay. Okay, so you want this cloth? Yes. You want this dress? Yes. Please pay. So the lady pays, and mostly it's full pay. So you make a full payment of 10,000, 5,000, 3,000. The money gets into the pocket of the person posting. But the person who has posted that is not the owner of that commodity in any way. So after getting the money, that's only when she will take the money, goes to the shop, and she knows where the shop is, you don't know it. She gets that dress and brings it to you and calls the riders. Your order is ready. Should I deliver it to you? Where do you live? And the boda comes to your home. Now, what you don't understand is you have engaged in an unlawful business. That business is invalid in both ends. Okay? It's invalid from the seller because the seller did not own the commodity. She sold it without owning. So she took money and put profit in it, because when she tells you 3,000, the dress is probably 2,000 or 2,500. So she has put her margin already and taken the money, she's gone to the shop, brought you the dress, delivered it to you, easy money, 500 ishaingia. But that money you have taken is unlawful. I can see murmuring, meaning people have done it, and now you're discussing how to go back. So how to go back, how to correct that, we'll talk about it when we finish. But I know you are doing it, and until today, you're doing it. I'm very sure about that. Now, By holding. You see, the Sharia is very open, very simple. Do you own the commodity before you sell it or not? It's very simple. The answer is yes or no. So let us not bring in what if. What if inatoka wapi? Hakuna what if. The question is, do you own the product? Now the answer is yes. Then go ahead, enjoy your profit. It is halal. If your answer is no, I don't own, I took the money, and at that time when I was taking the money, I didn't have milkiya, I didn't own it, then know for sure that that contract was invalid. And that money, the gain you have made, is unlawful. Now, how is the buyer involved? The buyer is involved in one way. If she or he knows that the seller doesn't have the commodity at that time of negotiation, then you are also involved under the principle of وَلَا تَعَاوَنُوا عَلَى الْإِثْمِ وَالْعُدْوَانِ. You are also a sinner. Okay? So, and if you know it, tell the seller, I'm sorry my friend, you are selling this commodity but you don't have it. So go get it and then sell it to me. And don't take my money to go and buy. Buy from your own money so that it becomes yours. And I will buy from you. That's what the banks do in Murabaha. The bank buys the car using its own money. It doesn't take the money from you to buy a car. It buys a car using its own money and calls you and tells you, we have bought the car that you have asked us to buy, and here it is. It's ready. Now pay for it. We shall come to Murabaha if we have time. Okay. Then we have Al-Ma'qudu alayh. Let us move forward. Maybe we'll take more questions later. Al-Ma'qudu alayhi are the commodities that are contracted. The money, the object, and so on. So the conditions for Ma'qudu alayhi are, number one, Al-Ibaha. Number two, that is, it should be Mubah. The commodity must be Mubah. You cannot sell an unlawful commodity. Any commodity that is not lawful, you're not allowed to sell. Or it can be a lawful commodity, but you're selling it to someone who is not allowed to have it, is also unlawful. Okay? Or you're selling it to someone who is going to misuse it, it's also unlawful. Right? I know maybe you can get stuck in this. I wish I could have given lots of examples, but I'm just worried about time. Let's take just one example to elaborate on this. Selling a donkey, it's halal, it's mubah. You can sell a donkey, as many donkeys as you want. If you have donkey, you want to sell them, you are in Lamu or whatever, you want to sell donkeys, you can sell. But if someone comes to you, wants to buy a donkey, and you are sure that this guy wants the donkey to go and slaughter it to eat from the donkey, then you're not allowed to sell. Okay? The donkey is mubah. But you'll only sell it to a person who rides on it, or is going to use it to carry luggages. Okay? But someone whom you know anakula punda, you are the kwambia niuzie punda. If you sell that donkey, you are part to that sin. Number two, another condition is al-qudra ala taslim. You should be able to deliver the product that you're selling. And number three, al-ilm. You must have knowledge of what product you are selling. If the product is still in Dubai and you are selling it, you are here in Mombasa, you don't know anything about it, you just heard about it, you are selling it, you are committing a sin, and the person buying it is also assisting you if he has the knowledge of what you're doing. So in short, any business undertaking must meet these three conditions. Principle number three is al-ibratu fil uqudi bil haqa'iqi wal ma'ani la bil alfadhi wal ma'ani. Transactions are judged by their spirit and substance as opposed to their form and structure. In Islam, what is very paramount and important is the substance, the spirit, not the form, not the format, the structure, no. You can write whatever you want to write. But what will hold as judgment in Islamic law is the spirit of what you are doing. You can claim to people that you are doing sadaqah, but actually what you are doing is riba. You understand? There's a certain form of riba which women, ladies are engaged in without knowing. But you look at it as sadaqah, but it's not sadaqah, it's riba. Allah has mentioned it in the Holy Quran in Surah Al-Rum. Allah says, وَمَا آتَيْتُم مِّن رِبًا لِيَرْبُوَ فِي أَمْوَالِ النَّاسِ فَلَا يَرْبُو عِنْدَ اللَّهِ وَمَا آتَيْتُم مِّن زَكَاةٍ تُرِيدُونَ وَجْهَ اللَّهِ فَأُولَٰئِكَ هُمُ الْمُضْعِفُونَ. What this verse means in brief is that whatever you give to others in form of sadaqah, okay, you must have the intention that you are doing sadaqah. But if you give to others in terms of charity, but your intention is to get another charity in return that is more than that you have given, that is riba, according to Quranic terms. That's what some ladies are doing when it mostly comes during harusi. Okay? So someone gives a lady who is going to have her daughter married 5,000. After 2 years, now the marriage is in this giver's home. It is her daughter who is getting married. Now she will say, let me see, will she also give me 5,000 or she'll give me 10? Sasa njoo ulete 2,000 usikiza utaambiwa nini? Utaambiwa, ankosa tahaya 2,000, mimi nampa 5,000 anipa 2,000. Now, how did you give that 5,000? You see? So if your intention was charity, you are giving it out as sadaqah. Why are you worried about how much you are given? Are we together? And why do you expect more? Now, if the person brings 10,000, ndio hapo unaambiwa huyu yajua kucheza. So kumbe huu ulikuwa ni mchezo. It was not charity. That's what Allah says, وَمَا آتَيْتُم مِّن رِبًا لِيَرْبُوَ فِي أَمْوَالِ النَّاسِ فَلَا يَرْبُو عِندَ اللَّهِ. What you give people, you think you're doing charity, but your intentions is to get more. That is riba. You don't get anything from Allah. If you do it clean heart, you want really sadaqah, then don't care whether that person gives it back to you, doesn't give back to you, you don't worry about it. But because of this today, watu wameingia katika madeni. Mtu because amechukua 5,000, ameletewa 10,000, now she has there is a daughter, there is a wedding from that. Okay, I think this is just a dhan that has been made, alhamdulillah. Now, I'm suggesting we can continue for about 7 to 10 minutes just before Salah. Then I will break for prayers, and we shall come at least maybe for the next 15 minutes or so to complete what's left, inshallah, if there's anything left. About Q&A, we shall discuss afterwards what you can do with that. Now, we have finished about the principles. I've kept them short, only 3 of them. Now, we can talk about Islamic banking activities. Generally, an Islamic bank is generally undertaking the following 3 major activities. Number 1, al-khadamat al-masrafiyya. Number 2, al-hawalat al-masrafiyya. Number 3, al-khadamat al-i'timaniyya. We are going to explain each one of these in the next slides. So starting with the al-khadamat al-masrafiyya. Number 1, the banking services. So one of the major services that banks undertake, what we call banking services. We can move forward. The banking services, and we have quite a number of them, but we are limiting these banking services And just two of them. You can move to the next slide. We have the exchange services and the deposits. Okay, so deposits is where the banks, one of the major roles and activities done by a bank is to maintain accounts. And that's what we mean when you talk about deposits. So deposits are the accounts that are managed by banks. We commonly have three kinds of accounts. We have savings, current, and investment account. That is also known as an FD, fixed deposit account. So these are the three major accounts that a bank runs. And then we have exchange services. Exchange services, we talked before of bay' al-sarf. And that's also, that is also one of the banking services and activities. A bank is engaged in exchange of currency. So you walk into a bank with USD, you want Kenya shillings, or you walk in with Riyal, you want USD, and so on. And the bank is providing you that service. The other kind of service provided by banks is fund transfer services. That is another important component of banking activities. And transfer activities involves two kind of activities of a bank. Number one, check, and number two, SWIFT. Now, by SWIFT, we mean transfers, whether local or domestic or international. These are banking services that fall under transfer services. You want to make a certain payment to Nairobi University, where your student is, where your kid is studying. You want to send money to the other part of the world. Now, a bank is providing you that service, and that is called SWIFT service, using the banking terms, but generally it is just a transfer service. And then another form of banking transfer service is the using the checks, whether and the check here mostly refers to the banker's check. Now, we have the fiqh explanation for this. The only problem is the adhan has already been said. I was to give you more details on how this works under the fiqh concepts. And but briefly, let me just say that these two services, that is the banks and the the check and the transfers by SWIFT, they operate under what we call the wakala contracts, as well as the saftaja. Saftaja is one of the classes of hawala contract. And hawala is whereby money is transferred from one end to another end at a fee. Okay, so that is where the bank is making its money from the fee that it charges for the transfer. And the fiqh explanation for the previous one, for the accounts, the savings, the current, and the investment account, is quite detailed, because each one has its own explanation. How banks maintain saving accounts, how do they maintain current accounts, how do they maintain the fixed deposit accounts, and then after the lapse of a certain time frame, they give you a profit and they tell you this is the investment that has been made from the money. But generally, let me just point at the fact that all these three accounts have been deeply analyzed in the Islamic financial, from the Islamic financial perspective, and they have been found to be meeting the required criteria for running those accounts in Islamic banks. But probably the main question that people are still hanging on is regarding the profit, the accounts. Okay, that is probably the main question that some people are still hanging on. And if we have time, probably I will have to take you through a certain explanation in fiqh for you to understand how that is done. Then the next part is the transfer services. We have talked about that. Then we have the trust-based services. The trust-based services are mainly two. We have the debt-based and we have the equity-based services. Under the debt-based services, we have loans, we have murabaha, we have tawarruq. These are what banks do, these services. Banks provide loans, they provide murabaha, they provide tawarruq. Now, with loans, we're going to talk about loans shortly. We will touch a little bit on murabaha as well. We will also talk about tawarruq. And we will be quite clear and honest on this, okay? Because at certain parts, there are some details that maybe I need to expound, even though time is not really on our side. So I think from this slide and onwards, the trust-based services and the loans, this is where we have a little bit of a technical explanation. And I was requesting maybe after Salah, if we can gather for probably 15 to 20 minutes, not more, we shall be able to complete what we have prepared for you today, inshallah. Unless you're tired, you may want to disperse after prayers, then it is all up to you, together with the organizers. So maybe the host can guide us. Now, Sister Shamsa. Shukran.
Shukran, Doctor. I believe all the sisters are very eager to learn. Even today myself, I've learned about the selling on the Instagram, which I didn't know was not Sharia compliant. You see, I think, it's a good thing that you've included this slide, which was not in the earlier presentation for the men. So actually, sisters, this was for your consumption and for your understanding. So I believe the 15, 20 minutes are still low for you to delve a bit deeper in that explanation. I suggest we will provide a prayer place, and let's break for prayers, and then we come back, and now do we take lunch or we continue? That is the question now. Because the lunch will be provided, we can decide, have 15 minutes lunch, and then come back, maybe for another 30 minutes, not 20, Doctor, if you will allow us. I believe we are all thirsty to learn.
Simultaneously with the presentation, it disrupts a little.
Okay.
Yeah, so we can rather hold on a little bit for the 30 minutes.
Okay.
We break, and then we can continue.
Okay.
Yes, we can have lunch.
Okay. Okay. So we break for prayers.
Yes.
Then
30
we come
minutes
back.
we finish.
Yes.
We have lunch.
Yeah.
And then we can, for the Q&A, maybe after lunch, if anyone still has something.
Okay.
After that,
Okay. Doctor is proposing we break for prayers, then we come back for 30 minutes, he continues, then we break for lunch and Q&A. Because I believe when we have lunch, we will not concentrate. And we need to learn, people. Let's maximize on this opportunity. Thank you. The prayer mats are available. Please, let's go for prayers.
You no longer need to beat traffic or queue in a banking hall to transact. Gulf African Bank's online banking platform, GovNet, offers you the fastest way to manage your money from anywhere, anytime, securely. You can now take care of your everyday banking needs from the comfort of your home, office, or while on the move. With GovNet, you can transfer funds to any bank account using SWIFT and RTGS and make multi-currency transfers while viewing daily foreign exchange dashboards. Opening a supplementary account is way easier on GovNet. You can request your debit cards and checkbooks online, stop a check service, and instantly make bill payments like credit card payments and iTax.
Okay? So all debt instruments, all credit facilities are based on trust. For that reason, they are called uqud al-i'timan. Now, we have three major debt-based services offered by Islamic banks. Number one, the loans. Number two, murabaha. And three, tawarruq. We also have BBA, and BBA stands for Bay' Bithamani al-Ajil. And Bay' Bithamani al-Ajil is similar to deferred sale or deferred contract, whereby the payment is supposed to be done at a later stage. Now, we start with the loans. First of all, we are defining what a loan is. And a loan is defined as any amount of principal when it is added with a gain. So a principal and a gain is equal to interest. And interest is riba. So a loan basically in Islam refers to an extra amount that is paid over and above the principal, and that amounts to riba. Now, riba in Islam exists in two forms. The first one is called riba al-buyu', and the other one is called riba ad-duyun. Riba al-buyu' mainly operates or takes the form of commerce, that is, it appears in commercial transactions, while riba ad-duyun is a debt-based loan, and it mainly exists in loans, in currencies rather than commodities and business. Another way of looking at riba is by, which is also known as riba an-nasi'a. Riba al-fadl refers to riba that emanates or is as a result of excess. Riba an-nasa' is an excess that is based on time. So that's what all riba is about when it comes to defining. So we are only defining riba so that we are able to go to the misconceptions. Now, let me expand a little bit on anwa al-riba, because it's quite important. As I said, riba occurs in two forms. We have riba al-fadl, and riba al-fadl is the riba that is charged as a result of excess. So any excess in any counter value, when the counter values are of the same genus, then that is riba. Now this needs a little bit of explanation so that it can come out clear. In any transaction, for those of you who have been with us from the beginning, we mentioned about counter values in a transaction. And the counter value are the two things that are exchanged in a contract or in a transaction. So one thing can be cash, the other one can be object, or they can both two be objects, which is called muqayyada, as we said, or both two can be currencies, which is called sarf, as we said in the morning. Now, what matters to us most here is how does riba al-fadl occur? Riba al-fadl means riba as a result of excess. And it occurs when there is an excess of a certain commodity over another of the same genus. Okay? Now, I think the best way of giving this example is, again, by going back to our Muslim sisters, the ladies. And I'm referring to the ladies because I want to talk about gold that is worn by most of our sisters. Now, it happens at times that a sister may go to a jewelry shop to have a new set of gold, or to have an exchange of gold. Now this is where I want you to be quite attentive, so that you understand how sometimes we at individual level are involved in riba. And riba is not only done by institutions like banks, the conventional and others. It's also done at personal level. Okay? So a lady walks into a jewelry shop and she desires to exchange the gold that she has. Now let us suppose that she has 2 rings, one